Every news channel is buzzing about the crisis in Iran, but let's be honest, they're all asking the same tired questions. Tonight, we're going to ignore the noise. We're going to focus on the one thing that truly matters and what it could mean for every single rupee in your portfolio.
You see the headlines, you hear the pundits, and everyone's asking the same thing. Is this just another war over oil? But what if that's the wrong question entirely? What if the real story has nothing to do with oil fields, but everything to do with the fragile, invisible architecture holding our entire world together? And what if it's about to shatter? Look, this is not just another geopolitical squabble. This is something different. It's about a new kind of warfare, infrastructure warfare. We're talking about a global supply chain so interconnected, so brittle, that one single point of failure could trigger a meltdown in everything, from the phone in your hand to the food on your table. So, to really get what's happening, you have to forget the usual script. Let's look at the very first move that was made in this conflict, because trust me, it tells you everything you need to know about where this is heading.
Think about it. The first strike wasn't on a military base. It wasn't on a radar station or a missile silo. Nope. The target was a freshwater plant, a desalination plant. That wasn't an accident. That was a message. It's a signal that the game has changed. The new targets are the things that keep society from collapsing. And all of this is happening right on the edge of the world's most important economic artery.
And this, right here, is the heart of the entire problem, the Strait of Hormuz. It's not just some shipping lane. It is the ultimate, non-negotiable bottleneck for the whole global economy. There's no way around it. You threaten this one tiny choke point, and you don't just create a few ripples, you set off a catastrophic chain reaction across the globe.
And that's really the core of what we need to understand. This isn't just a story about one thing, like oil. It's about a cascade of failures, a domino effect where one crisis triggers the next, and it starts with energy, but believe me, it doesn't end there.
Okay, let's just trace the dominoes as they fall. 1, the obvious. Oil and gas tankers can't move through Hormuz. Fine. But here's the second domino that almost nobody is talking about: sulfur. You see, without constant oil and gas refining, the world's main source of sulfur just evaporates. That leads to domino number 3, a crisis in sulfuric acid, probably the most important chemical in the world. Without that, you can't get base metals like copper out of the ground. No metals, no tech hardware. At the same time, this blockade cuts off natural gas to Asia, which could kill the power grid for a digital world and choke off the fertilizer supply that literally feeds the planet. It's all connected. And here is a number that should honestly terrify you: 92%. That is how much of the world's sulfur comes directly from refining oil and gas. It's not something we mine. It's a byproduct of the very process that's now at risk. So when refining stops, the fundamental building block for thousands of industrial processes just disappears. Poof, gone. The next domino is LNG, liquefied natural gas. A massive chunk of it flows out of Qatar, right through Hormuz, and it powers the industrial heart of Taiwan. And what's in Taiwan? Well, just TSMC, the company that makes a staggering 90% of the world's most advanced computer chips. So no LNG means no power. No power means no chips. And no chips means the engine of AI, of our phones, of everything just shuts down. And, if a complete tech blackout isn't scary enough for you, how about this? One-third of the world's feedstock for nitrogen fertilizer, the stuff that allows us to feed 8 billion people, also has to pass through the Strait of Hormuz. A disruption here isn't just an economic headache. It is a direct threat to global food security. Okay, so that's the big, scary global picture. But let's bring it right back home. What does all of this actually mean for you, for me, for the Indian investor? How does a crisis in a tiny little strait thousands of miles away actually land in our portfolios? Let's map it out for the Indian market. That sulfuric acid shortage we talked about, well, that's a direct hit to the profits of our paint and chemical companies. The semiconductor blackout, that means our auto giants can't produce cars and electronics companies can't build anything. Even our world-beating IT services sector, it's at risk because if their global clients can't get hardware for data centers, they freeze their spending. You see, every single link in that global chain is pulling on a sector right here in India. So, faced with all of this, how do we react? Running for the hills is not a strategy. What we need is a plan, a clear framework to watch the situation unfold and make smart decisions, not emotional ones. So really, there are 2 roads from here. The bull case is that this all fizzles out. Tensions cool down, some deal is made, and the market takes a quick, sharp dip that becomes a fantastic buy-the-dip opportunity. The bear case, though, that's the nightmare. That's a full blockade of the strait. If that happens, you're looking at oil prices going to the moon, a guaranteed global recession, and a long, painful bear market, where the only thing that matters is protecting your capital. So how do we know which road we're on? This is your personal dashboard. These are the warning lights you need to watch. First, what are the key nifty support levels doing? Are they holding? Second, Brent crude. If that thing gets above $100 a barrel and stays there, that's a massive red flag. Keep an eye on the India VIX, our market's fear gauge. If it starts spiking, big money is getting scared. Then you look for signs of stress in the financial system. And finally, watch the shipping indexes. They're the real-time pulse of the global supply chain. If that pulse starts to fade, we have a serious problem. Now, I know this all sounds incredibly risky and overwhelming, and it is. But in moments exactly like these, when fear is at its highest, we absolutely have to zoom out and look at the bigger picture. We have to look at history. Just look at this. 2008, the Nifty down 60%. The COVID crash, down 40%. The start of the Ukraine war, down 20%. Each one of those moments felt like the world was ending. But what happened next? Every single time, the market didn't just recover. It went on to new all-time highs. The lesson here is crystal clear. Panic is temporary, but wealth creation is permanent, for those who are ready for it. This is the most important thing I can tell you. You have to change how you think about a crash. It is not something to be afraid of. A market crash is a department store sale. Everything is marked down. Your job isn't to panic and sell. Your job is to have your shopping list of fantastic companies ready to go. I mean, it's the core philosophy of the greatest investor who ever lived, Warren Buffett. He built his entire fortune on this one simple idea. The best time to invest isn't when everyone is happy and markets are at all-time highs. The best time is when there is blood in the streets, when fear is everywhere. That is where you find opportunity. So look, the situation is dangerous, no doubt about it. But with the right framework, it is absolutely manageable. The real question is, what's your game plan? Are you raising a bit of cash? Are you building that watch list of great stocks you've always wanted to own? I'd really love to know what you're thinking, so let me know down in the comments. So let's just quickly wrap up. First, remember this is a supply chain crisis, not an oil crisis. Second, that domino effect is real and it threatens everything from tech to food. Third, you've got to monitor those key triggers we talked about so you know which way the wind is blowing. And finally, and most importantly, history proves that the moment of maximum fear is almost always the moment of maximum opportunity. If you got some value out of this deep dive, do me a favor and hit that like button. And definitely subscribe for more analysis that goes beyond the surface level headlines. We're going to be tracking the story very closely. And just a quick disclaimer before we go. All of this is purely for educational and informational purposes. It is absolutely not financial advice. Please make sure you talk to a certified financial advisor before you make any investment decisions. Thanks so much for watching.